Welcome to the Accounting Technology Lab, brought to you by CPA Practice Advisor, with your hosts, Randy Johnston and Brian Tankersley.
Welcome to the Accounting Technology Lab. I'm Randy Johnston with my co-host Brian Tankersley. We have some important announcements from Intuit we'd like to discuss. These all occurred after the Intuit Connect conference this year. One of them was the recent announcements in early December on QuickBooks Desktop pricing, and also the announcements of the OpenAI relationship. So we know these will affect your decisions now and into 2026 and beyond. So, Brian, you've read the announcements as I have. What do you think our listeners need to know about this OpenAI $100 million a year contract?
Well, I will say first off that Intuit has, they have always kind of asserted an ownership of clients and data, and that's something that has always given me pause about them. I want to love them, okay, but it's really given me pause with QuickBooks Online Live and TurboTax Live, and then their inability to opt out of AI training with the information. And now we see that Intuit has $100 million a year contract with OpenAI to put to implement their AI models across all those products. And of course, with no opt out in there, that means your data is going to get used for that, which is something that kind of gives me pause. They're integrating again TurboTax, Credit Karma, Mailchimp, and QuickBooks into ChatGPT to be able to give financial guidance in chat. We've seen stuff where data can go into these models, and the training data can go in and then be brought out. Now maybe they're anonymizing all this data, we don't know, but it's another, again, it's another thing that they're doing that makes me wonder about the privacy and data control concerns here.
So, Brian, to your point and a piece, I read the details around the permission data, and it was not clear what was going to be moved back and forth. And, an alternate concern that I have right now for users of Chat GPT is because of their lawsuits related to suicide. The e-discovery rules that have been put in place say that all chats and all results have to be retained for 5 years. Okay, now, if that's the framework, all OpenAI chats have to be retained for 5 years. First, I'd like the firms that are listening to us to reflect on their records retention policy. Is a 5-year retention okay for you? And then further, you're absolutely right. If TurboTax, Credit Karma, Mailchimp, and QuickBooks Online, and I believe also Intuit Payroll, have this interaction with the AI models. It was one thing when we were running on Intuit's AI model. It's another thing again.
That was not public facing. That was not public facing. It's a whole different. You're right. It's a whole different kettle of fish now that we're doing something with a public facing, very popular AI model that hundreds of millions of people have access to go in and to do queries off of.
Yeah, and I'm optimistic that OpenAI will improve their data controls when they become public. But that's a 2-year run right now, just like Anthropic Claude is on their 1-year run trying to get to be public, because the way public companies have to handle data, like Microsoft learned the lesson on handling data, is a whole different deal. But this idea of permissioned Intuit data where ChatGPT can answer tax and life event questions, I thought it was fascinating that Sam Altman, when he converted to Code Red the first week of December, when Gemini Pro came out and surpassed many of ChatGPT's capabilities from an accounting procedure perspective, said, I never thought people would use them for romantic relationships and counseling and all of these life things. So when you think about life event questions, hey, I'm getting a divorce. What's the best way to protect my assets? Those types of questions here to estimate refunds and suggest tax moves. And, in this platform where they're supposed to be able to act immediately, again, how many of your clients would you recommend that they self-serve on tax strategy decisions?
Well, and that's the thing is that people don't know what they don't know. And the problem I think that you have with respect to tax strategies delivered by AI is that it's really only as good as the training data. And I was reflecting on a conversation I had with my dentist the other day. My wife's best friend just passed unexpectedly, and my dentist had no idea that she died. Okay, and you think about the treatments that doctors give. There is no back end knowledge that, hey, this really went sideways for this person. And that could happen here. I've said for a long time, the AI based tax software is going to be great until humans don't look at it, and then people get audited, and then what's going to happen then?
Yeah.
um,
Well, and our tone today, friends, may sound a little pessimistic because both Brian and I have had close friends pass away in the last 30 days. And it's probably made us far more aware of life consequences. And you deal with this every day. All of us do have friends, family, and clients that, eventually their lives end. We all are faced with that. But this is to me a far more of a strategy decision and maybe all decisions are personal and all finances are personal, but in my world I try to share my financial situation and decisions with my family because they're going to have to deal with it once I'm gone. and
well,
uh,
that's right.
and
That's right. And I will say that I have, you know I will just put an open invitation to Intuit anytime. We're ready to have a conversation with you off the record about privacy if you think we're getting any of this wrong. Okay. If you think we're describing this inappropriately, we want to talk to you because it is important to us that we are telling the truth and not, and again, if you think we've got this dead wrong, we'd love to speak with you.
Yeah, that's absolutely the case. Well, so there's promise when I see announcements like this because here you get
Yes.
cash flow projections, you get AR, you get invoicing, you get lending options, marketing help, and maybe this transitions the profession to advisory and oversight rather than transactional rules. But this is a real innovation if it works right, and it is also a high risk maneuver. And I guess maybe that's the way I would think about this is, with high risk comes high reward. With high risk comes high failure also.
Well, but you got to understand that Intuit is also running against the likes of Digits and Puzzle and Campfire and many others that are not retrofitting AI into their platform, but designed their platforms with AI at the core of it. I've been doing some stuff with Digits lately, and I know you and I are going to talk to Jeff, the founder of Digits, and in his upcoming podcast that we're actually going to record later today. And it's a different experience when you're working with those platforms. um, I'm not going to suggest that I have detailed the privacy at the same level of that I have the Intuit one. But I will say that the experience is different, and Intuit, rightly so, is concerned, I'm sure, that their cheese is going to get moved, and so they're
Yeah, and
throwing they're throwing the kitchen sink, it seems like, at everything.
yeah, and to your point, Brian, in separate episodes, we'll have an interview with Jeff Sievert of Digits, who's the CEO. And we've known Jeff for some time because we thought he had a good reporting tool. And when earlier in 2025, they released their actual accounting, and about 2 weeks before we recorded this episode, they released their new automatic reconciliations. All those are big moves forward. Also, in a separate episode, we're going to talk about these AI powered ledgers because at this point there's half a dozen or more that are hitting the market, and it's going to change the way we deal with our client accounting services. Well, Brian, we've got another major topic really to talk about here because the other significant thing is QuickBooks Desktop on received major price increases that are going to be effective February 1 of 2026. Now, you can look these up in a linked article, but the bottom line here is QuickBooks Desktop Pro Plus is going to go from $1,000, $200 a seat to 1150. Let's do the real numbers: 999, 200, and 1149, 230 a seat. And Premier is going to go from 1399, 300 to 1609, 345. So in effect, we're seeing, pretty significant price increases, but this isn't even the toughest part of it, because the other editions we're going to talk about, the Accountant Edition and Enterprise Edition, have even greater increases than these 150 to five or $400 class price increases.
Okay, so I predicted this 7 years ago that the way they were going to kill off desktop was that they were going to go in and they were going to raise price until people screamed, and then they were going to keep raising price until they went to something else. And so I will just categorically say that it is my opinion that you need to be getting off of QBD by the end of 2026, because I don't know. We won't know until this time next year whether or not they're going to renew it and allow it to be sold for another year. Okay. And I'm not suggesting you go to QBO categorically, but I am saying that it's time to do something in 2026 if you haven't done something already, because this boat is going down and we don't know when it's going down. And the last thing I want is for you to have 80 clients on this and then suddenly have to make 80 conversions to a new system that nobody knows and have to answer all the questions from 80 business owners all at the same time. I mean, I think you need to figure out an orderly exit at this point.
Yeah, and
Um,
the number that I've been using, independent of you, Brian, is 2027. And the other question I've routinely asked, and it has been a pleasure to see many of you in the fourth quarter of 2025 at events, because literally I've spoken to thousands of you, and many of you have walked up to ask about our episodes and direct questions. But here's the net on this. The most frequent QuickBooks Desktop question I've gotten is, what can I use for QuickBooks Desktop clients since QBO doesn't work? In other words, it doesn't have the right inventory or costing or whatever feature that you're missing. And the short answer that I've been giving, I believe correctly, is perhaps Zoho Books,
yep,
Soft Ledger, X
yep.
Ledger, Odoo, and although it's a little early, dual entry. So all of those products, I think, have the similar or superior features to QBD.
Now, let's not forget Custom Books that also has a multi-client interface in it. That's also very good. And FreshBooks is not long on inventory features, and Xero is not long on inventory features either, although they're getting better. But they both have good multi-client interfaces too. So I think I think there are a lot of outstanding choices out here that you can use. And I think we've covered all of these in previous Technology Lab episodes, and I will try to get some links out to Isaac of where we've talked about some of these products, so you can go back and listen to those episodes if you want to learn our take on some of those platforms.
Yeah, but the net on this, friends, is pretty straightforward. It's our opinion that it's time to plan the move, and you're going to need to do due diligence. And a year ago at this time, we really only thought for client accounting services in CPA firms, there were only four or five viable alternatives: Xero, QuickBooks Online, Sage Intacct, and
Zoho.
Iris Accountants World Accounting Power, Zoho Books, and perhaps in the right situation for not-for-profit Aplos were kind of our mainstream recommendations. Today, I routinely refer to 20 different products, and we're not going to have 20 winners here, I don't think. Maybe we will, but that's, I just want you to be aware of that. So that gets us to the Accountant Edition price increases. Talk about an oh my. I did get to meet George Takei of Star Trek fame at one hot time. Sorry about tongue tying there. But George has this phrase, and he's got a deep voice, much deeper than mine. But he often will put his hands on his face and say, "Oh my." That's what I said when I saw these desktop accountant prices.
Yeah, I mean, desktop accountant, 11.99 to 17.99 for one user. Pro Advisor bundle that used to be $200 or something like that is now
179.
going from $9.99 to $14.99, and the Enterprise bundle, which is, I think this actually was the 179 version, is going from $15.99 to $23.99. Okay, and there was a movie back in the early 2000s called "He's Not That Into You." Okay, and that's what I would say here is that Intuit has decided that they're not that into us, especially if you want to use desktop, and that's their decision. But I just want you to see these numbers in here, because it's not only going to cost your clients a huge amount more money. It's going to cost you a lot more money to be able to be in a position to support them with the software that you need.
And at these price points, Brian, you might as well be up in mid-market products or certainly in what I'd call tier four products that are far more capable for far less.
Well, I mean, 23.99, that's 200 a user a month. Okay. That's what NetSuite and Intact and the the tier two, tier three products cost. Not the tier, we're not talking about the tier four products that are the things you use when you graduate from QuickBooks. Okay. We're talking about the stuff up here that's just below SAP. And so the thing about this is that it's just, and it's not really as much about the money as it is about change. Let's look at some of these other things in here. Okay. QuickBooks Enterprise. Okay. 6 users, Enterprise White Gold, um, $6,598. $6,598. Okay. So that's about $100 a user a month or thereabouts. Okay. It's a little less than that, but it's about $100 a user a month. Okay. For a single user, 200 over 200 a month for White Gold. Okay. Again, you can see these price increases, and these are up, but so the 6 user price is up about 15%, if I'm doing the math right in my head here. Maybe 14%, something like that. And the White Gold is up 10%. But again, one user at 2467, and this was $400 or $800 not too many years ago.
Not too many
Uh,
years ago. That's right. And so for those of you that are just listening, I'm just going to blow these out pretty quickly. The QuickBooks Enterprise White Gold is going from 2243 to 2467 for a single user, going from 5,737 to 6,598 for 6 users. The QuickBooks Enterprise Silver is going from 1703 to 1873, and the
and
six
that's all for a single user.
single user, and the 6 user goes from 5746 to 6608. And you're right, Brian, it wasn't that many years ago. I guess that's another good exercise for us to do at some point in time, is just show the increase over time on these. But I guess it's not material, frankly. But you and I do have the same recollection that enterprise was only a few $100s per user. And here's the other problem, friends, is these products have problems with performance when the data sets get too big. So the problem is many of your clients, possibly even you, are staying on the system because the user interface is familiar and you know a lot about it, but it's kind of sluggish at times. And that issue has continued to plague QuickBooks Desktop throughout the years. So again, there's reasons that it runs slow. There's reasons and ways you can make it run faster. But, I guess we're ending the legacy era with this podcast. The legacy era of QuickBooks Desktop, we think, is coming to a close.
And this is going to create people problems for you, because there are a lot of people who have used QuickBooks a lot, and it's what they know and it's what's comfortable. And the online version is just not the same product. Okay. It is a different code base. I had a discussion, gosh, 15, 17 years ago with Rich Walker back when he worked for Intuit about this at a Dallas event in 2008. And he said that, it's a completely different code base and it's for a different customer, and it will never have the same UI. And so that's the problem that you're having to deal with now, is you have people with all this institutional knowledge that is not worth what it used to be. And so they're having to figure that out.
Yeah, and Brian, as you've said in other contexts, to many users, QuickBooks Desktop is accounting.
Yeah, it's not a tool for accounting. It is accounting.
Yeah, and
And
that's
so it makes people that again don't have detailed debit and credit understandings because of education or whatever. They have more of a process understanding. It's very, very threatening to these people, and it's going to cause turnover at firms when you make these changes. But the problem is, where are you going to go? This product is dying. Okay, and you got to go.
yeah, so this is a bit of a Ghostbusters problem, if you will. Now, the other thing that also occurred was these per employee charges in QuickBooks Desktop. So, again, I'm going to read these for those of you listening, but if the number of employees is 1 to 9, it's $3 a monthly per employee fee. And if it's 10 to 29, it's 250. If it's 30 to 99, it's $1.50. If it's 100 to 219, it's $1. And if it's 220 plus, then there's no extra charge per
No extra
employee.
charge for 220 and forward, but you still have to pay for 1 to 219 at those rates we've just cited.
Yeah. So notice that that's another little twist on the pricing. And if we continue on price increases, payroll then comes of age. And, again, here's where many people want the integration capability of QuickBooks Payroll, and I appreciate that. And again, to set this up for Brian's comments, QuickBooks Desktop Payroll basic goes from $557 per employee to $647 an employee, and enhanced goes from $707 per employee to $805 and $7 per employee. And if we look at QuickBooks Desktop Payroll Legacy, which is probably more in tune with many of what you'd be thinking about here, the unlimited 4+ employee fee was $1,100 with a $5 direct deposit fee,
Which
going to
was already shocking.
right, going to 1270 with $5 direct deposit fee. And if it was enhanced payroll limited for 1 to 3 employees, it was 850 with a $5 direct deposit fee, going to 980 with a $5 direct deposit fee. So I'll turn it to you, but I'm just going to say in general, we have routinely over the last 5 to 7 years recommended alternate payroll solutions to Intuit's payroll for a variety of reasons, not to mention pricing. But we've also been appalled at how payroll vendors have increased prices. And we think that's come from a couple of different paths. One, private equity purchases of payroll companies have led to some of those price increases. And there's been some other just, oh, the market can bear it. So everybody's moving these numbers up. And then the other way that I've been saying it, and this is a sad statement for me to have to make. It's almost like the providers of software to the profession have decided that CPA firms are making too much money, so they'd like to move about 10% of the profit from your firm into their businesses. And you're unfortunately probably going to have to respond with price increases to uh, your clients on all sorts of different fronts to accommodate these additional technology charges. And the thing that aggravates me on that is price increases for technologies for no visible upgrades of software or technology. We're just raising prices because our costs are up and because we can. And, you know, I, I categorically disagree with that. If you've structured your business so you're making enough dollars, yeah, you may have inflationary adjustments, but, if you're supporting and building a product, make the doggone thing better and have that as part of your cost of doing business.
And the if I had to describe this in one word, I'm trying to decide between two words. The words are rapacious and unconscionable. Um, and it's just crazy. Okay. Now, that having been said, Intuit's a public company. Public company is going to public company. So you gotta deal with it, and you have that now. The ACH fees, it looks like they've changed those a little bit. New ACH fee, and I don't have this came out of Murph's great article out of Insightful Accountant. That I don't have the categories in here, but it looks like you've got a 1% charge on the ACHs. Okay. Now, this is an interesting number that also so we have this. It's just you know it's just going to be a lot more expensive to do desktop. Now, this is the other piece. This is out of Intuit's Investor Day presentation that came out in September. And this shows you the QuickBooks Enterprise and the desktop customer split. And so they're saying basically that over the last 5 years, they have shed about 100, I guess about 100,000 desktop customers, and they have increased the percentage that are on enterprise. Okay. So you can see that number has come down, and I think it's going to come down at a appreciating rate in their fiscal 26, as people get off. Again, folks, train. We're coming to the end of the A line, and it's time to get off the train. Okay. Is how I would kind of wrap this up. It's again, and we understand why they're doing it. They want to get into AI. They want to do things with data. We have concerns about the data. We've said that, the uses of data, and again, it's time to do something different.
Yeah, and on this is not a surprise because when all of the other versions of QuickBooks Desktop were discontinued, Enterprise was a natural landing zone. It allowed you to perhaps get a little better performance, preserve the path on this for a little bit longer. But my forecast was still stuck. I think it's 2027 is about how it's going to land out. So that's
And enterprise, and as soon as they can get market share for their Intuit Enterprise suite, the QuickBooks Enterprise is going to drop like a hot potato, and those prices are going to go the same way that desktop has. Okay.
well,
So you may be able to do something in the short run, but in the intermediate term, maybe, but in the long run, you're going to have to do something different.
yeah, well, Brian, sorry to interrupt you there, but any parting thoughts for our listeners? Because we've run pretty long on this podcast today, and we just want to be conscious of you. I think you've got the message. Any parting thoughts, Brian?
Yeah, I think I've shared them. I think it's time to do something different. Now you can do QBO, you can do something different. But I think, the reality is that you're going to have some hard decisions for a lot of people that have been married to QuickBooks for 20, 30 years. The train's coming, the train line's coming to an end, and you're gonna have to do something different. And so that's something that you need to plan on doing in 2026, so that you don't get caught waiting at the train station with nowhere to go.
Yeah. So all of that said, friends, I told you it would be a little bit of a downbeat episode, partially because of the deaths we've had in the family. I guess we have deaths of QuickBooks Desktop and QuickBooks Enterprise imminent. But on a happier note, I guess we'll say Happy New Year and happy replacement software hunting. Until another time, we'll speak with you again in Accounting Technology Lab. Good day.
Good day.
Thank you for sharing your time with us. We'll be back next Saturday with a new episode of the Technology Lab from CPA Practice Advisor. Have a great week.